A very good evening and a warm welcome to all the crypto buddies. I would like to welcome you all to the land of Cryptoverse. I'm Rekha Khan, your host for the webinar, and we will be having with us today Mr. Abdul Rahman Yakubu joining us from Nigeria and Mr. Ajoy Pathak from India, who are expert on crypto and blockchain industry. Today we are going to be talking about blockchain application in finance. Now that you have joined, you would notice that you are in mute. If you have any questions throughout the webinar, please write them on the chat section. At the end of the webinar, we would be holding a Q&A session where all the queries of the participants would be answered by our speakers. From the creator of Odin, MCX, IEX, here is yet another credible and exchange-neutral platform a user can rely on while walking towards the path of crypto and blockchain understanding. Starting from education to knowledge to latest news, all covered under one super app, CryptoWire. From a novice to a professional trader, every market participant can have a slice of information readily available on the touch of their finger. Let me first walk you through the world's first crypto university, crypto TV, and CryptoWire services. We all know that crypto and blockchain ecosystem emerging at an immense speed, and to keep a track of all the events, prices, and news look to be difficult. So what if we have an app like our buddy who walks with us, thinks like us, responds to what we expect? Yes, you heard it right, your own global crypto super app, CryptoWire. Let me take you through the app briefly. Here is a global crypto super app, CryptoWire. Let's start with the homepage of the app, which covers all the three pillars: Crypto University, Crypto TV, and CryptoWire services. Under the CryptoWire services, we have rolled out India's first global index of crypto, IC15. This is yet another feather in CryptoWire's hat. It tracks the performance of the top 15 cryptocurrencies globally based on market capitalization. Crypto enthusiasts and crypto traders can take informed decisions based on IC15. Coming to WireWatch, in this section, we can monitor the best exchange to buy and the best exchange to sell a particular cryptocurrency. In the center of the screen, we can monitor the arbitrage opportunity available between the two exchanges for the same cryptocurrency. There are more than 350 plus cryptocurrencies listed on our platform, along with 70 plus crypto exchanges worldwide. Wow. Coming to Crypto TV, it's an exclusive 24/7 mobile IPTV covering everything on crypto and blockchain ecosystem. It is currently available in 4 different languages: English, Hindi, Gujarati, and Marathi. Coming to the third pillar, which is our Crypto University, being the world's first digital university to offer courses and on crypto and blockchain, you can find the best courses available and offered by MIT and Harvard on a single click in the app. With this, I would like to introduce you all to our first speaker of today, Mr. Abdul Rahman Yakubu. Abdul Rahman is a crypto and blockchain enthusiast. At a very young age, he has started tracking the crypto and blockchain industry to become the youngest ambassador for How We Go Global Exchange. He has a very good experience of DeFi, NFTs, Metaverse, GameFi, and SeFi. He is very actively working as a community manager in the crypto space. He is currently working on some very interesting crypto projects as a community manager in Nigeria. He is a very active and enthusiastic trainer amongst the youth community in Nigeria. Join me in welcoming Yakubu. Hi, Abdul Rahman. How are you?
Hello.
Hi. We thought we lost you.
Yeah, I just joined back.
Okay.
Hello everyone.
Hi.
So she had already introduced me. I am Abdurrahman from Nigeria, and yeah, I'll be one of the speakers today. So we will be discussing about blockchain applications in finance. So let me share my screen.
Yeah, please.
Okay. So, can you all see my screen?
Yeah, we can.
Okay, great. So today we will be discussing about blockchain applications in finance.
We can't see your screen. I think your sharing stopped or something.
Yeah, it's still shared.
Okay, cool.
So before we discuss about blockchain applications of blockchain technology in finance, we will need to understand the blockchain technology itself, how it works, and why we even need the blockchain technology. So what is the blockchain technology itself? A blockchain technology is a digital ledger of transactions that is duplicated and distributed across the entire network of computer system, which are linked together using cryptography. What I mean by this is that the blockchain is used to store information that are distributed across computers that are within that blockchain. It uses cryptography to connect those computers. Here are some key points to note from my definition. Yeah, so the first one is digital. The blockchain itself has to do with computer technology. The blockchain system entirely is online. The second point is ledger. Yeah, the blockchain stores records of transactions or information. And the third point is decentralization. That means blockchain is not controlled by a central authority, though the decentralization depends on whether it's a public blockchain, which can be accessed by everyone, or a private blockchain owned by an organization. So basically, a public blockchain is more decentralized and transparent than a private blockchain. The next point is distribution. So which means the information stored on blockchain are replicated and shared across the computers that are in that particular blockchain. So basically, all the devices in the blockchain will have the same information stored on them. Another thing to note about blockchain is the cryptography, which is a way of securing, which is a way of communication in which only the sender and the receiver will have access to the information. So the information on the blockchain is encrypted in such a way that only the computers within that blockchain can be able to decrypt it. This makes the blockchain very, very secured. To understand this, let me move to the next slide. So yeah, this is what I was trying to explain from my previous slide. The blockchain itself is a connection of computers. So all of those computers that are connected contains the same informations, and those informations that are shared within those computers uses a technology called the cryptography, which is a way of securing information in such a way that only the sender and the receiver can be able to access the information. So the blockchain is a system of recording information in a way that it makes it difficult or impossible to change, hack, or cheat the system. So every device that is connected to the network is called a node. So these devices that you are seeing on the screen are called nodes, and the nodes run the blockchain. Without them, there is no blockchain. Those nodes help in verifying the information before it gets stored on the blockchain. So my next slide is a pictorial representation of the blockchain, how it works. Yeah. So on this slide, I'll be explaining how the blockchain works. So if you look at the first, that's step one. For you to for you to have a transactions on the blockchain, number one, you have to request for the transaction. And when you request for that transaction, a block is created. That's step two. The block represent all those transactions that are created within that period of time. And then the step three is that block that is created is distributed to all the nodes in the system, in the network. And from my previous explanation, what I said a node is, a node are all the computers that are within that blockchain. So when the block is created, it gets shared to all the nodes within that network. And then what happened next is all the nodes try to validate the block. And validating means to verify the information. So this makes it very, very difficult to alter or manipulate the information, because the information has been distributed to all the nodes in the network, and it's been verified by all those nodes. So it will be very, very difficult, even if a single computer is having a different information. What the majority has, that is going to be verified. So after the verification, the block is then added to the block is then added to the other blockchains, to the other blocks, and those blocks are in series. They are connected in chain. So immediately the block is added, the transaction gets verified and executed. So I will explain more on the block in my next slide. So here, as you can see, this is how the block forms. So the block one contains transactions. And one thing about block is all blocks have a unique identification code, which is called the hash. Yeah, so you can see here, the hash for block one is 6U9P2. So after that block is verified, when the next block is being created, the hash of the previous block is added to the new block. So in that way, all new blocks have information of the previous block. Yeah. So let's move on to the next slide. So yeah, why do we need the blockchain technology? Yeah, why do we need it? One second. At the core, you can find the blockchain's importance by going through its key features. These features makes the blockchain irresistible in diverse scenarios and mark itself as the best solution. So the first thing is security. The blockchain uses cryptography to add a layer of security to the data stored on the network. The decentralization feature on top of the cryptography makes blockchain provide better security than other systems. Cryptography utilized complex mathematical algorithms that are used to secure the data on the blockchain. So this makes it very difficult for the data to be altered or changed by someone. And the next point is decentralization. So what I mean by the decentralization is decentralization is the most important feature of the blockchain system. This word contains complex concepts such as economy, technology, and philosophy. So there are various ways to define decentralization, but the most popular and simple way is to define the system by comparing it to centralization, decentralization and centralization. So decentralization in blockchain means there is no central authority that controls the system. Decentralized system can offer user privacy and anonymous control of the system, which are essential features of the consumer protection. For this reason, a decentralized system can be said to be an excellent system for customer protection. And the next point is speed. Blockchain transactions are relatively very fast. In a matter of seconds to few minutes, transactions on blockchain get validated and executed. This helps in saving a lot of time and resources. So my next point is transparency. Another aspect of the blockchain, that makes it very important is its transparency, which depends on the type of blockchain. So the public blockchain provides better transparency due to its nature. Basically, a public blockchain can be accessed by anyone on the internet. So through the blockchain explorer, we can be able to track transactions. Information stored on the blockchain can be easily traced, and this is very useful for different functions of our society, which includes election. So imagine using this technology during election. So basically, with this technology, we can be able to bring solution to manipulation of votes, which is done by the election representatives. So the next point is immutability. When data is stored in a blockchain, it is impossible for any person to manipulate or replace that data on the network. Immediately it's stored, it is going to be there forever. So this makes this makes auditing process quick, efficient, and cost-effective procedure, and brings more trust and integrity to the information stored. Because basically, when you know that the information stored on this system cannot be altered, when you come to audit or get an information without having much doubt, you would easily just get the information because it cannot be altered. So in my next slide, now that we've understand why we need the blockchain technology, we'll move into the applications of the blockchain in finance. The last point, which I almost forgot, is the trustless system. The blockchain, for all those nodes that are connected in the blockchain, they don't have to know each other in order for the blockchain to run. Basically, anybody can connect to that particular blockchain and be a validator in the blockchain. This makes it more decentralized because the people participating in the blockchain validating don't even know each other. So let's move on to my next slide. Let me see. Yeah, so we will be discussing about blockchain applications of blockchain in finance here. So one thing you should note is that the blockchain is not only applied in finance, the blockchain can also be applied in supply chain in such a way that manufacturers of goods and services can be able to track distribution of goods and services from the manufacturing level up to the consumer level. And the blockchain can also be applied in the health sector. It can also be applied in smart agriculture. and smart security to track records of criminals. It can also be used in gaming and entertainment industries through the use of NFTs. I believe some of you that are here that have been into crypto have probably heard about the NFT. So in this webinar, we will be focusing on applications in finance. So when we talk about applications in finance, the first thing that comes to our mind is cryptocurrency. But actually, it can be applied in other sectors of the financial market. It can also be used by insurance companies through the use of smart contract. And smart contract in blockchain are a computer program that follows a particular protocol. The smart contract executes automatically when those protocols are met. So let me explain what I just said. So normally when you have your asset damaged or the asset gets spoiled, when you go to the insurance, they would ask you to bring evidence and things that they will use to like verify the incidents that occurred. And that process is usually takes a lot of time. So with the smart contract, they can be able to make the process automatically, the verification automatic. And when the evidence are verified, that person can be compensated for that issue that occurred to him, or another way, the other sectors that the blockchain can be applied in finance is tax collector, mortgage companies, and banks. Banks can use the blockchain to store and audit customer information very easily. So these are some applications of the blockchain. Number one is the cross-border transaction. So with blockchain, you can be able to make transaction with anybody in any part of the world. The blockchain is decentralized, so it is not controlled by a particular government or country. It can be used by anybody from any part of the world. Another thing you should even know about the cross-border transaction, even if the person is in space, as long as the person has a crypto wallet and there is internet connection, you can perform your transaction with the person. So the next point is transaction security. So as I explained earlier, the cryptography makes the blockchain very secured. So it is almost 100% resistant to hack and breach. So if you compare crypto transactions or blockchain transactions with the traditional banking system, you would notice that crypto transactions are faster, and especially when you are trying to do a cross-border transaction from one country to another, and the cost you will pay is very, very low. So another point is blockchain finance platforms. So basically, these are like the blockchain banks. What they do is they are leveraging on the blockchain technology to make profit. And examples of these platforms are like exchanges like the Binance, KuCoin, Hobby, and the rest. These are examples of blockchain finance platforms. So another thing that the blockchain can be used for is customer data storage. Because the information on the blockchain cannot be altered, companies can use it to store the data of their customers, and they can easily get that information whenever they need it. So with this, we'll be moving into blockchain application in centralized finance. So basically, centralized finance has to do with cryptocurrencies that are being traded on exchanges. So before the introduction of decentralized finance, centralized finance was the standard for trading crypto. In centralized finance, all crypto funds and trade orders are handled through a central exchange. This means that you don't own the private key that provides you access to your wallet. And the authority behind those exchanges are the ones managing the private keys for you. So examples of this centralized finance are the Binance, Hobby, Coinbase, KuCoin, and many other exchanges. And also, these exchanges decide on the coins they list or how much fee you will need to pay in order to trade on the exchange. And you are also subjected to rules and regulations set by those centralized exchanges. So here are some key features of centralized exchange. The number one feature is fiat conversion flexibility. So basically, you can be able to convert your fiat currency, maybe the currency used in India or any other country. You can be able to convert it directly to buy cryptocurrencies. But if you look at DeFi, it only deals with crypto to crypto transactions. Another point is low trading fee. If you compare centralized finance to decentralized finance, the fee on centralized finance are very, very low because the authorities are being able to, decide on how much they want users to pay for the trading fee. But on decentralized finance, because centralized finance has to do with authority and decentralized finance has to do with the technology. So in order to avoid people from spamming the decentralized finance, the trading fees are relatively higher compared to centralized finance. Another point is cross-chain service. On centralized finance, you can be able to deposit a coin from blockchain A and withdraw it using blockchain B. So for those that already know some Ethereum blockchain, Binance Smart Chain. So basically, exchanges gives you the ability to maybe send coin using the Binance Smart Chain blockchain to the centralized finance and withdraw it using Ethereum chain. And these are things you won't have if you are using decentralized finance. Another point is custody. So on centralized finance, the exchange, the authority behind the exchange manage your private keys. So you won't have to worry about losing your private key because if you are using a non-custodial wallet, the moment you lose your private key, you won't have access to the funds in that wallet. So centralized finance take care of that for you. They manage those private keys for you. And another thing you can do on centralized finance is staking. So basically, staking means to lock your crypto for a particular period of time. It might be days, months, and when you lock those coins, you get rewarded. And if you compare the reward to the traditional finance, it is relatively higher because you can lock your crypto for like a year and end up having an annual yield of almost 50%. So another feature of centralized finance is lending. So the centralized finance allows lending. So basically, if let's say you need money and you have your cryptocurrency, maybe you have a Bitcoin and you don't want to sell your Bitcoin at that time. So what you can do is you can give your Bitcoin as a collateral to the exchange you are using. Maybe it's Binance or it's Hobby. All these are available on those exchanges. So you give your Bitcoin to them and then they will give you another coin as a loan. which you have to pay back later and then have access to your Bitcoin that you gave as a collateral. So another thing that another feature on the decentralized finance is crypto debit and credit card. So exchanges nowadays are having their own credit and debit card. Basically, you can use that to withdraw coins on ATM machines, and you can use it to do online transactions. So you don't even need to go through P2P transactions. So basically, with your crypto debit or credit card, you can withdraw through ATM, and you can perform online transactions. So the country that is currently using this particular feature, the last one, is El Salvador. I don't know if you guys know about El Salvador.
Yeah, we do.
Few months back, they started accepting cryptocurrency as a legal tender.
Right. Yeah.
So these are the features that you find on the centralized finance. So this is the evolution of money. So as you can see, in the beginning, what people were using, is animals to, trade. You give me this animal, I give you that what you need. And then from that, we moved to using of commodities, which are the gold, silver, and the rest for exchange of goods and services. From that, we moved to using of metal coins, which are the coins that. And then from that, we moved to paper money, which are our fiat currencies. So from then, we started using the plastic cards. So, you don't have to withdraw the money and then start moving with it. And then from there, we move to electronic money. Basically, on your system or on your phone, you can be able to perform any transactions. And then now, things are moving from electronic to cryptocurrency. And why things are moving from electronic to cryptocurrency is because of the security, transaction speed, and technology, because the tech keeps improving. So the cryptocurrency is a lot more better than the electronic money. Yeah, so these are the things I have for my presentation, and hope you guys understood. So now I'll
Thank you. Thank you, Abdul Rahman. That was a very beautiful way of showing us the evolution of money in a very pictorial way. It was very basic and good to understand the evolution. Thank you. So thanks, Abdul. He is covered on the basics of blockchain, how it works and why and where it is needed. So these were the things that Abdul Rahman explained to us. Going on, we would have our second speaker for today, Mr. Ajoy Pathak. He would be sharing his views and ideas on today's topic with a bit more detailing on decentralized finance. Mr. Ajoy Pathak is a crypto expert. He comes with 20 years of rich experience in the field of training, research, and development. Being an early adapter of the new technology, Mr. Ajoy has great expertise in understanding the fundamentals of crypto and blockchain industry. His passion for training and education has got him a long way. He believes in being full of life and loves to connect with like-minded people. Join me in welcoming Ajoy.
Hi, hi, Saab here. Do you mind if I do not try to share my video, because I'm not sure if my bandwidth will be allowing me to do that. I'm facing some issues.
Actually, in fact, I was asking Abdul Rahman to also on his video, because when we post this on the YouTube, it may not look good, with the stagnant pictures.
So I'll try to.
Please do that. Abdul Rahman, I would appreciate if you could also kind of keep your video on.
Okay, so basically, blockchain has taken us a long way, like what Abdul has said. Abdul, fantastic presentation, buddy. Excellent talk. So basically now we are getting a bit more serious on the financial applications of blockchain over here. And the world is moving over. And the kind of attention that we are seeing in decentralized finance, it's breathtaking. So let me just share some of the basic details of how decentralized finance is shaping up, what are the different things it is coming up with, and things like that. So once we are talking about DeFi, DeFi basically is two words, decentralized and finance. So we will try to understand both these terms a little bit in depth before we venture into what DeFi has already achieved in this point of time. So once we're talking about decentralized thing, one very interesting thing comes to my mind is this picture. Whenever you go to Google, decentralized, you try to understand the concept of decentralization and other things, this picture pops up. And this has been, very extensively debated and deliberated. You go to Quora, you'll get tens of explanations. You go to, Medium, you'll get a lot of explanation about what this thing is. But at the end of the day, this kind of leaves everyone confused. And it has left me confused for quite a long period of time in my life as well. Even Buterin has written a fantastic piece on decentralization in Medium. It suggests you should go and read it. So ideally, what this says, in the original script, is figure A is centralized, no doubts about that, no debate about that. Whereas they are saying that B is decentralized and C is distributed network. Now, if I go to Ethereum stack, it says, well, B is distributed networks and C is decentralized. And the entire world goes into confusion about which one is which, about in between B and C, which one is decentralized actually, and which one is distributed. So basically, after skimming through all the literature and other things which is there, I figured out that in B, we find some amount of delegation of centralization to different nodes. So we call it distributed centralization. So it's still centralized. It still goes through the central authority to give you the governance rights to different entities otherwise. Whereas the third one, no one single node or this dark dot is basically somebody who's taking control of the whole situation. So that's true decentralization, and that's what we are trying to achieve in a P2P network. Okay, so now keep this picture in mind. Let's go and evaluate what are the financial systems right now. In our traditional financial system, we as customers, we have to log in through a bank. So basically, there's a financial institution in the center and it connects to all the customers. So if I need to make a payment to you, basically I'll have to go through the bank. So although I have your account number and other things, whenever I send a payment instruction, it moves through a bank through a bank or its branch or whatsoever. It verifies and validates, incorporates the financial institution in between, and then the transfer happens. Now, one thing is coming up in the latest stage right now at this point of time, and that's something which is really appreciable. We are seeing a lot of financial intermediaries cropping up, with third-party finance providers, basically of the likes of Paisa Bazaar, Insurance Bazaar, Loan Bazaar, and things like that. So what is happening is that all these centralized financial activities are now being shared with these third-party APIs to these institutions who are taking it forward to the customer. So there's kind of a B2B2C kind of an approach which is coming into finance at this point of time. And this is something what we call presently as open financial system. Now this again is like what we saw is distributed centralization and not really decentralization. If I talk about a decentralized network, now I'm extremely sorry. I mean, my picture drawing qualities are very bad. Now, this looks like a decentralized finance, the friendly neighborhood Spider-Man splitting out a spider web out there with everyone connected to everyone by some means or the others. Okay, and this actually is the spirit of decentralized finance. in which there is no central controlling authority who can censor or, kind of keep your data in your control and things like that. So this is centralized finance, and financial protocols being applied over this is something which the world is advancing to at this point of time. Okay, now there are certain problems of centralized finance, finance through the banking institutions and other things. One thing is that centralized finance has been the traditional way of finance. The banking segment, they build in trust. They bring in trust in a transaction. They are the source of trust. Okay, so I don't trust you for making a financial transaction directly with you. Howsoever, if you are vetted by a bank, if you show me that you have a bank account number and things like that, which I can do, it says that automatically I can trust you because my transaction will then be backed by a financial institution who is providing, his word on your behalf. So they are a source of trust into all the financial transactions that we go into. Now, this source of trust is also a big problem. It's a big solution. Now, that was a solution when, we did not know much people, the communication systems were not in place, the technology was not that advanced and things like that. At that point of time, the centralized authorities coming in and establishing trust and things like that was a big advantage. But today, when the communication systems are up and running like this, and we have got these cryptographic protocols to replace the cryptographic proof of transaction as the source of trust, do we really need them? That's a big question. Now, that's something that we need to answer. That's something what Abdul talked about, that there is a philosophical approach to this entire blockchain thing. And that's where we get stuck. Do we need these guys? Do we need their intermediation? Do we need to pay them fees? Because they have become whales now. They have become very big institutions. And these institutions do not only charge a hefty fees for their services, but also they are controlling a lot of things. And that's the third problem that I want to talk about. Now, second problem is access and inadequate access. Even today, World Bank data reports that 1.7 billion of adult population of the world is unbanked. These financial institutions have not been able to reach them. Okay, and there are some ones in the remotest parts of Africa and even India also. These are big countries. Logistical problems, communication problems, all are there, but still there are people out there. And they're losing out to be on the mainstream. They cannot have a bank account. They cannot apply for jobs. They cannot get education and things like that simply because they do not have access to financial systems, which can bring and see change in their lives. Now, this, with their financial, this 2,000-year-long presence and their financial prowess that they have, they're still thinking about, do the benefit to reaching out to the last mile guy cover the costs that I will be incurring to reach out to him, which have forced them to live 1.7 billion people in the wilderness. The DeFi doesn't do so. The DeFi just needs internet access and mobile smartphones, and they're connecting it. Protocols like UMA, Celo, they're doing it every day. And they're working into the deep, hinterlands of these large continents of Africa, South America, Asia, to reach out to them. So that's one thing. Okay. Now, third thing, which I was talking about, censorship and control. The moment these guys, they access the control, they assume the control, they now can do anything. They can give loans to people who will default. They know they will default. They still give out the loans. Whereas people, honest people, small finance people, microfinances, they do not get loan because they do not have somebody to vouch up for. They do not have collateral, suppose. So there is a huge amount of censorship, a huge amount of control, and huge amount of misuse of this power, which is also witnessed in centralized finance, in financial institutions. Look at the kind of scams that has come up in the recent days all throughout the world. It has have a centralized finance guy in between, involved. That's the kind of thing that we're talking about. So again, I'm raising the question, do we really need these guys? Today we have the technology to replace them. Do we really need these guys? Cost and inefficiency. Now, what is happening is that as the economic activity is intensifying and also the population is going up, the number of transactions which we are entering into is increasing exponentially. We are talking about IoT, where machines would be transacting with humans, machine would be transacting with machines, not only humans transacting with humans anymore. So the multitude of transactions which needs to be recorded and processed through the ledger will become, multi-billions, trillions, in fact. So do these financial institutions, a centralized kind of an organization, do they have the capability to scale up to this huge demand for their services? Or would they scale up at the cost of transactions going up? What about the micropayments? Will they be able to, even address the need of micropayments coming in? We are very much aware that, a minimum transaction amount being imposed by certain financial institutions, because then the cost to cover even recording the transaction or processing that transaction does not cover the transaction amount or volume or the profits they make out of it. So all these things are some of the problems of centralized finance, and DeFi or decentralized finance really puts solutions to this. The trust system is replaced by a trustless system. I do not have to trust anybody in between, may it be any person, because persons are motivated by their whims and fancies. Algorithmic protocols are not. Algorithmic protocols remain the same all throughout the life in different conditions. Whereas a bank manager, if he's like the AC is not working, he may deny you the loan. Algorithmic protocol will not. As simple as that. The whims and fancies do not rule the outcome of the inputs to an algorithmic protocol. It might very well be, a change at the discretion of a human being. We call that human error. That's what the trustless system does. That's the advantage of DeFi over CeFi. The access that I talked about today, Uma and Celo are doing it. They are moving into the hinterlands where banking has not reached, reaching out to that 1.7 billion people, adult population of the world, which has never been reached by the centralized financial institutions. And that's a huge thing which is happening out there. Then censorship and control. That is replaced by protocol-based control and governance. It is all in the open. The governance is there. The governance protocol is there. It's community which decides on how it will be governed, how it will be managed. So one can easily choose from one DeFi protocol to another DeFi protocol, whatever is suitable to him, his philosophy, his ism, and go ahead. Then comes disintermediation. The demand on the transactions for the demand of services on this decentralized ledger blockchain scales up along with the supply for services, because it's a P2P network. More and more people joining it, more and more messages will be created and broadcast. So basically, not a single entity has to process all the transactions and make records to them. So the scalability problem for recording transactions at least is not there over here. So that will remain the costs in balance, as simple as that. If the costs are lowered, it will increase the margins for all these financial protocols that we are seeing. There is one question which I often find from my banking friends. I mean, they don't take it very nicely whenever I say them, and they're good buddies of mine. We have grown up together. They're in banking, and whenever I talk to them, is that you guys are cutthroats and things like that. They protest back. They ask me, who takes the risk? I take the risk. I, as a bank, take the risk. I said, no, you do not. As an institution, you do not take the risk. You kind of redistribute the risk, channelize the risk and the rewards among the population. Today, if somebody defaults, you do not take the risk. The risk is redistributed among your investors or people who are depositing their savings with you. So at the end of the day, it is people who take the risk and people who reap the rewards. And just because you are channelizing the risks and reward, you are keeping a hefty margin for yourself. With decentralized protocols, with smart contracts, DApps and DAOs, I do not need you. I can still do the same thing of borrowing, lending, insuring, and things like that. easily. So these are some of the tools, these are some of the technology which aids decentralized finance. One is smart contracts. Smart contracts are auto-executable, programmable contracts. Okay, so they really do not need any kind of a monitoring. They are the risk, the counterparty risk is managed by escrow systems inbuilt in between. Therefore, all the legal costs to a contract are whisked away. You just program it, and somebody reads the program, agrees to it, and enters into it. And the smart contract will only execute if both the parties are fulfilling their part, their obligations. If one person is failing, it will not just execute. So it just does not let the risk event happen. Decentralized applications, these are people connecting over smart contracts and other things to do certain activities, to engage in certain activities. Now, these smart contracts can write down anything, different real life contracts like lending, borrowing, insurance, and whatnot. They're just replicating whatever there is in the finance, but offering a decentralized and automated situation. With the smart contracts, we can entirely run an organization on contractual basis. We call it decentralized autonomous organizations. You do not need different people to run different arms of that organization. It can just run on itself, protocol after protocol, one protocol triggering another. Successful completion of one cycle can automatically trigger the start of another cycle, and that's how organizations work. And that could be achieved with smart contracts. Now, there are people who do not like volatility. For them, there are stable coins, store of value, discernible value which they can identify with. It may be gold, it may be dollar, it may be rupee. Right? Then there are atomic swaps. Atomic swaps are basically protocols in which you put in one kind of a cryptocurrency and take out another kind of a digital asset. One digital asset goes in, another digital asset comes out. These are basically the construct for automated market makers or liquidity pools or loan pools. These technologies are powering decentralized exchanges around the world today, exchanges who are not controlled by any person. Exchanges which just connect wallets to wallets, and smart contracts operate transfer of cryptocurrencies between those wallets or the liquidity pools for that matter. And oracles. These are data-driven elements in which data, real-world data, is being fed into the blockchain system, causing triggers to certain smart contracts to happen, like options contracts. So if it is raining in some place and you have a weather option on a particular date, if that is the event which is contracted into your smart contract, and the rain precedes or exceeds the stipulated amount, the oracle will feed that system, cause a trigger into the blockchain, and that will cause a smart contract. And those things are happening. These automations are already taking place. And these are the tools which are aiding DeFi, taking it deep. And today there's a large number of offerings and use cases that we see. We see it in very simplified cases like lending and borrowing. Protocols like MakerDAO, Compound, Aave, they're doing so. Decentralized trading and P2P marketplaces like Uniswap, Bancor, these are total DAOs exchanges. They do not maintain an order book like centralized exchanges. They maintain liquidity pools. They have automated market makers. Financial services and fund transfers. Today, issuance like IPOs, they have become tokenized. Securities can be tokenized. And those securities and those tokens could be redistributed. So we have seen ICOs, initial coin offerings. We see STOs or security token offerings. Similarly, we have IDOs, initial DEX offerings, decentralized offerings today, happening over various launch pads, powering financial application. And all this, the entire asset management life cycle of these tokens are very, very much easy nowadays. Today, we have tokens as financial instrument even for Tesla stock and Apple stock. So basically, Once we are tokenizing all these assets and taking it digital, it goes beyond jurisdictions. It really goes off, takes off. Anybody can participate, and tokens can be subdivided into million parts or zillion parts for that matter. So that is now approachable to a large investor base also, who can put in very small amounts to participate into that financing process. So widening the base, deepening the reach, taking it over the jurisdictional boundaries, a lot of benefits that is being offered over the decentralized finance at this point of time. Yield farming. Yield farming is another way of benefiting from these markets. Different protocols are giving different stake yields. So you borrow from one, lend from one, you make the difference in between. That's yield farming. And that's something with smart applications like Your Finance, Core Finance, they're providing. Alternate savings like Linen pulled together. That's happening. Now, alternate savings, they provide you with an alternate route to make money from your crypto savings. They kind of, it's very much kind of staking, but with a different approach altogether. Staking is into the staking protocols, which redistribute the mining rewards to you, but alternate savings is like putting their thing into different protocol altogether. Margin trading, DYDX, Mango markets, they have come with leverage trading options out there, and it's all smart contract based. Insurance. Now, insurance is a very interesting area, because even the actuarial sciences, and I have got friends over there who say that insurance makers, they know that people are going to misinform. So the insurance idea of Uberima Fite, which really means is that under good faith, does not work in the insurance markets in centralized mode today. That's why the cost of insurances are too high. And that's the reason why insurance penetration is like 2 to 3% in a country like India. If insurance has to be offered on decentralized platform, the risk gets redistributed among the people who are participating over there, and the cost of insurances can be drastically low. 1/6 or 1/10 of the current insurance costs. And that's happening over insurance protocols like Insurace, Nexus Protocol, OPM Insurance, and things like that. Then again, staking, we mentioned about staking, these are staking networks in which people who own cryptocurrency, they can stake to a particular pool, which will be in return mining, and they'll be redistributing the mining rewards. So these are some of the use cases. Some of the challenges, I mean, again, the DeFi, I must say, does not come, is not all good, not all hunky-dory. There are some challenges, there are some risks. One is smart contract vulnerabilities. Normal people do not understand the program coding in smart contracts, although they are open, they're there in the open finance. One can go to GitHub and check any smart contract for that matter, audit it, and thereafter participate in it. But then smart contracts are written by people, and people can have some error, some bug. Nobody knows where. Only the smartest of us could find it out, and the smartest of us could very well be a hacker, and he can exploit that, bug. So there always will be security concerns and some vulnerabilities with smart contracts. Scalability, performance, and user experience is a big challenge. So unless and until this protocol really gains popularity and everyone in this world, the whole 7.5 billion people participate into this, scalability, performance, and user experience is going to remain a problem. But it's improving, as we talked about. It's improving daily. Then again, user habits. We are habituated to the centralized system. In fact, look at my own elder brothers. They just don't believe in decentralized finance. They say that this is all a fad. This is all, geek. Cryptocurrencies are illegal. Still, people are talking about it. Cryptocurrencies are illegal. These are user habits. You can't fight them. On the contrary, I find the younger guys, they are more acceptable. They're accepting it with wide open arms. Okay, these are fantastic. They'll let me earn while I'm playing games. They'll let me earn while I'm learning and things like that. That's happening. So basically, it's a young man's thing. Younger generation is accepting it at a faster rate than the older generation because the resistance to change is higher. So user habits are actually a big roadblock, a big challenge for the DeFi. The learning curve is also a big DeFi because people think that I can't understand technology. This is too technical for me. That's not actually, if you try to understand it. But that's fine. Let us look at how it has been proceeding. So we have the DeFi market cap presently at 105 billion. This is today's data. Presently at 105 billion. Still going strong. It saw about 120 billion in first half of 2021. And it will steadily grow because a lot of activity is flowing into this at this point of time. We are talking about MetaFi, so financial transactions in Metaverse. We are talking about collateralization of NFTs. We are talking about commercial applications of non-fungible tokens as new entrants into this area of DeFi. So these are some of the things which is happening. And if you look at the total DeFi wallets, that's increasing. Today it's 4.3 million. Total value locked in smart contract platforms is today at around $112 billion, which is huge. And it's still increasing and it will increase. And the cumulative DeFi revenue for users and token holders have around close to $4 billion. And that's also a very rising curve. So all these things, they paint a picture of hope, strong growth in the DeFi segment in the coming days, much better protocols to come by. How do you participate into a DeFi process? So if you've got assets in cold storage, you put it into a hot wallet, okay? Transfer it into a hot wallet. Connect that hot wallet to a popular wallet system, whatever the DeFi protocol is using. And most of it today use MetaMask because most of the DeFi applications are ERC20. So connect your hot wallet to a MetaMask for transaction signing. And then you connect that to a particular decentralized application. Over here, I have taken the example of Aave, which is a lending and borrowing platform. And then initiate the transaction, sign the transaction with your MetaMask private key, and broadcast it to the ERC20 mainnet for mining. And that's it. Your transaction is complete. So the biggest challenge is to connect your hot wallet to the MetaMask wallet and then connecting the MetaMask wallet to the particular DApp wallet. So these are the only two things, these linkings you have to do, and you're all set to use that protocol. Once you practice it out, it becomes very super easy. Till the point of you keep on wondering how difficult is this, how difficult it is to participate in DeFi. Try with a very small amount. Try participating in all the protocols that is there, lending, borrowing, insurance, and other things. Explore it out. It's going to be fun. Yield finance in particular is going to be very much fun. So welcome to the world of DeFi. And that's my thank you slide. I tried to put some of the DeFi environment over there for you to leave you with this so that you get motivated to participate in that. Thank you so much.
Thank you so much. Thank you to both the speakers for taking out time and sharing their views on today's topic. I would also like to thank all the wonderful audiences who have shown interest in learning and making informed decisions before entering the crypto market. I would now request both the speakers to kindly address the questions raised by our audience. I have a few questions which have come in. So let's take up the first question. So I've got one question, which is, what are the possible risks in engaging in the crypto market? What are the possible risks in engaging in the crypto market?
Who's going to
Ajoy?
take that? Abdul?
Can you hear me?
Yeah, we can.
Yes.
Yeah, so definitely there are risks in getting involved in the crypto market. Not just the crypto market, the whole financial market, there is risk in that market. So what's the most important thing to do is make sure you don't invest what you can afford. This is very, very important. And then when you are investing, make sure you do a lot of research. Don't just blindly invest, or just buy coins without checking those coins, doing enough research, reaching out to those that have more experience, like the crypto expert, reaching out to them, asking for their reviews on those coins. Yeah, so make sure you do a lot of research, and definitely there is risk, but you can avoid this risk by being sure you are very, very careful, and do not trust information you see. Make sure you do your own research. Even though you see an information online, make sure you do more research on it. Don't just take that information maybe from influencers or any other person in the crypto space. Make sure you always make your own decisions by yourself.
True, very true. Do you want to add to this, Ajoy?
And don't lose your passwords. Keep your password safe.
Right. Very true. Thank you. Coming up, the second question is decentralized finance more impactful in developed countries? Would you like to take this up, Ajoy?
See, the thing is, obviously, the level of education in developed countries is much better than that of, developing ones
Sure.
at this point of time. So, the user resistance to accept the DeFi protocols is much lesser in the developed countries. That's for true. But then again, and also the developed countries have come up with conducive legal environments for people to participate into that thing. So that's also a contributing factor. But then look at this. In when we are talking about cryptocurrencies, we are talking about blockchain, we are talking about DeFi, NFTs, and other things. We are not really talking of any jurisdiction for that matter. We are talking about a digiverse where we all are equal. We all are, our public keys, and we protect our data. We own our data. That's what we are talking about. So this is the time to really think beyond the boundaries, backgrounds, and things like that, and think of it like participating in one global work process, work order. That's what my view is, like my 2 cents. Abdul, whatever you think.
What are your thoughts, Abdul, on this?
Definitely, I'm with your point. In regards to that, definitely the more developed countries use this technology more than the less developed, because in regards to the education, exposure to the technology, they tend to get access to these informations earlier than the less developed countries. So even when it comes to the adaptations is more in the developed countries than the less developed countries.
Got it. Thank you. I have a question which has been directed to both of you all from Mihir Mishra. The question is, as an intern in blockchain development, I have found that most of the people are using Ethereum. Meanwhile, Polygon is much better than Ethereum. What is your perspective?
Okay, my perspective is very simple. Ethereum is your computer chip, and Polygon is the layer 2 protocol, which is just an application layer on top of that. So yes, obviously, Polygon is layer 2 and Ethereum is layer 1. And of course, Polygon came only recently, so the Polygon ecosystem is still developing. So hold on to your horses, Mishraji. Very soon you will find it very attractive use cases in Polygon as well. And there are other protocols, also layer one solutions, which are coming up as an alternate to Ethereum. See, you have to appreciate one thing, that Ethereum foundation came into existence in 2013 and Ethereum has been around from 2015. So from 2015, it has got a lead of about 7 years over protocols like Avalanche, Algorand, and Cardano, which are systems very similar, smart contract platform systems very similar to Ethereum. But then adoption is one thing, and today, this last week, I heard of a news of an DeFi protocol called Kava. It's basically decentralized banking, and it's a very good protocol. They have started integrating not only to Ethereum but also to Cosmos. So today projects are looking at multiple layer one solutions to start developing their ecosystem onto. So these things are happening. So we are moving to an interoperable system, a global system in the digital technology verse also. But today, these technologies are siloed. So it will take some time for those bridges to happen and them to evolve into a greater technosphere.
Absolutely.
Your take on this matter.
Yeah, so you have already said the points, and so basically Ethereum is more popular than the Polygon, and there are more dApps on the Ethereum network, even though there is a high transaction fee, and the scalability is not big compared to Polygon. But people tend to use Ethereum more than Polygon. But definitely, as the project grow, you'll see investors and traders moving from the layer one to the layer two, because in the layer two there are like solutions to layer one. So in regards to the technology used in building the layer one, the transaction fee, this transaction speed, definitely the layer two are trying to bring something that is even better than the layer one. So the adaptation is coming, definitely.
Right. Obviously. True. So we have last two questions that are the second last question is, how cost effective will the shift be from traditional financial system to a blockchain backed model? This, I think, is a very important question.
Okay.
Joel.
So just to give you an example, where traditional finance is giving out margins of around 6 to 7%, I found that one blockchain-based system is giving me returns for the same thing at 42%.
Wow.
So that's the kind of savings or savings from disintermediation that we can get in blockchain-based systems. If not more.
That's like really big.
It's huge.
It's huge. Yeah. True. Abdul, would you like to add to it? What are your views on?
Yeah, so what I can say is in regards to that is education, which is the most important, creating of awareness. Most people don't have much knowledge about the technology and the things it's providing. So through educating, just like the way cryptoware is doing, we can get a lot more people to have an idea what the cryptocurrency is, and also take part in it. So yeah, education, and then understanding the technology, and then they will gradually start moving from the traditional finance to the blockchain.
Correct.
Absolutely. Yeah.
Thanks, Abdul. Thanks a lot.
Yeah. Thank you so much, Abdul. for your kind words. And yes, I think that's what we commonly are doing, right? I mean, all of us are here to educate people and try and explain to them why it is really important to shift. So yes, thank you. The next question up is, which industry in finance would be more benefited by the blockchain technology?
Insurance.
Insurance. So yes. Anything to say, add to this, Abdul?
Yeah, not just the insurance also, but tax collectors, because in regards to tax payment, a lot of people try to avoid paying those tax, and while some, when the funds is paid, they don't reach to the government. The funds get taken by other, maybe the workers. So through the use of blockchain, that all this can be the solution to that. So people won't be able to like take the money, or and it will help to ensure that people are actually paying their tax, because basically it can be traced, it can be tracked using the blockchain, whether a citizen has paid the tax or not.
Right.
So definitely this will help.
This will block the corruption. Absolutely.
Sure.
I completely agree to this point. I completely agree to this point. Ajoy, in continuation to this, there is one more question that's popped up.
But you asked me most, so I said insurance.
Yeah, so in continuation to that, what are the blockchain use cases in finance other than insurance sector?
Oh, there are a lot of them. I just, look at the screen that I am sharing at this point of time. All these things are blockchain use cases.
Right.
So we have payments, we have custodial services, investing, marketplaces, prediction markets, stable coins, KYC and identity, derivatives, exchanges and liquidity. We have infrastructure, insurance, and other stuff.
It's all there in the screen.
It's all there. It's all there. This is one area of innovation which is literally amazing me every day. Huge innovative potential of this thing.
Absolutely, I agree to it. It's a field which is every day you're learning a new thing.
Correct. We are talking about micro payments now. We are talking about IoT payments now, machine to machine transactions. We are talking about GameFi or financial transactions in game NFT based games, Metaverse games. We are talking about EasyFi and we are talking about MetaFi, financial payments in Metaverse. We are talking about collateralization of NFTs. We are talking about tokenization. We are talking about IDX launch pads and things like that. We are talking about just going digital in every aspect of our life and much more.
Absolutely. Everything has got digitalized, and yes, there's a lot more to go. So with this, I think we will wind up the session on the Q&A, and I would like to welcome all the crypto enthusiasts to kindly download the CryptoWire app if not done today and be a part of the global learning. We would request all of you to please share your feedback on the session. This helps us enhance our sessions better. Thank you for attending the webinar. We hope all the participants had a great session and all your queries and doubts were clear today. Looking forward to your participation for the next webinar. Thank you so much. Thank you, Abdul Rahman and Ajoy, for being a part of today's session.
Thanks to all of you. Thanks to all the participants, Abdul, Ruxar, for this wonderful opportunity. Really enjoyed it. Thanks. Bye-bye.
Absolutely. Even I enjoyed it. Thank you, Abdul Rahman. Thanks, Ajoy. Have a great day. Bye.
Thank you. Have a great day.
Yeah, you too. Bye.